So the economy's been in shambles ever since the pandemic, right? We went through that. Everybody got their government bailouts. Companies got bailouts from the government for employees or lack thereof. You saw people get bailouts that were able to work from home or may have lost their jobs. The unemployment rate was through the roof, right? But also through the roof were the government handouts. We saw the stimulus checks go crazy, right? Everybody went crazy. And what I said during that time, if you were around back then, what I said was that eventually it would catch up with us. Eventually, everything was going to come out in the wash, and that's exactly what is happening today. So I have a video here for us to watch first before I get into the topic that you saw in the title. So let's get into it and see what it's about.
It ain't you. It's these motherfuckers right here. It's the motherfuckers on the top. So now we gotta do this shit again.
So all I have to say is this.
We gotta do this shit again. Nobody tell me, there's nobody here tell me why I get emotional. Why you talk like that? That's fine. That's fine. You can do that. You don't know what I motherfucking feel. I want my ass over this motherfucker.
Exactly.
I mean, 30-something motherfucking years.
Yeah, I agree too.
30-something fucking years. You tell me I ain't got no motherfucking pension.
Yeah.
And nobody tell me to calm my ass down. Fuck everybody tell me to calm down. God damn it. This is my motherfucking money y'all playing with.
You're right, Dwight.
Fuck that shit.
So this is what I'll say.
You gotta tell me how the motherfucking feel. Fuck that shit, man.
So this is what I'll say.
Fuck this shit.
Anytime the government, anytime the government bails out a corporation.
So this particular video is about a disgruntled employee who has worked his entire life under the belief that he would be retiring with a pension plan. And he's finding out in real time that the company he's worked for and built up all those years and sweat of equity is going belly up. And the company he works for is Yellow Trucking. Now, some of you may have seen some of their vehicles out on the road throughout your travels, your daily travels. Well, they are in the middle of filing for bankruptcy after failing to reorganize and restructure and manage $1 billion in debt. They're going belly up. Now, you heard him say, y'all playing with my money. And unfortunately, it's not a game. That's what these companies can and will do. Behind the scenes, there's turmoil and chaos going on, and you, the associate, will be completely oblivious to what's happening. I've seen it happen twice now. I've seen it happen twice at 2 different organizations I've worked for, and one of them was when I was a manager at Home Depot. Yes, the #1 multi-million-dollar home improvement giant. They did the same thing. I watched them come in and fire everybody in HR and tell them, hey, sorry, but we're only keeping the district positions. Everybody at the store level, y'all out of here. And the harsh reality was that there was nothing they could do about it. Just like there's nothing he can do about it. Nothing he could do. What can he do? What could he possibly do? Sue? He could. Could sue. But good luck winning a case like this with a company that's about to go bankrupt. Pension plans are damn near non-existent today in our economy. And the thing that was supposed to replace the pension plan as it fizzled out and companies stopped financing their employees' lives in their old age was supposed to be the 401k. And now the 401k with the company match was designed to replace the pension plan as a way to incentivize workers to 1, fund their own retirement, and 2, eliminate the financial burden of handing out pension plans to employees. And guess what? Now, even the 401k is in question. 3 months ago, I went into work, and when I walked in, there was a letter on the table. And that letter was telling all of the employees at my company that the company was temporarily stopping the company match to the 401k. So we could still contribute, but the company is no longer donating to our retirement and matching our contributions. That was months ago. They have not resumed. Sucks, right? Now, there was obvious outrage, but again, what could we do? Absolutely powerless. And if you were depending on that as a means to increase your quality of life or even just maintain your daily life expenses in your retirement, well, now you got to find another way, which is what brings me to today's topic of creating passive income streams. We talk about it all the time. You hear it all the time, I'm sure, if you're any part of the finance community. But listen, in the month of June, I received 96 different checks from multi-million-dollar companies and brands all over the country. And I was able to accomplish this due to the dividend payouts that I received across 3 different investing accounts. And the best thing about it was that I didn't have to do anything other than just exist, be me, and buy a stock. And I want to tell you all that when I started investing and heard about the FIRE movement and people building passive income streams from just investing, I was skeptical. I honestly didn't believe it. I didn't believe it was that easy. And here we are today, and I'm fresh off of a 96 check paying month of June. This is the easiest form of passive income streams ever. There's literally nothing easier in this world. So very quickly, before I get into the companies and what they paid me and how much it all totaled up to, I want to reintroduce the idea of earning passive income through dividend investing to those that may be unfamiliar with this strategy. It's very simple. It's not a scam. It's 10,000% legit, and it'll be one of the easiest streams of income you'll ever create. Now, do I recommend this over investing into an ETF? No, I think you should do both. But quickly, what is a dividend? The textbook definition from Investopedia says that a dividend is the distribution of corporate earnings to eligible shareholders. But simply put, dividends are payments made to shareholders of any company that pays them, right? Paid out from the company's earnings and cash flow. So everything that they earn, they pay you out just a small portion of it. So think of it as a thank you for buying into the longevity and growth of a company or brand. So a quick fact check. Dividends are thought by many to be a non-factor. You hear it all the time. Dividends are useless. They're meaningless. Well, from the year 1930 to the year 2022, dividends have accounted for at least 41% of the total return of the S&P 500 index. Men lie, women lie, numbers don't. Men lie, women lie, numbers don't. When you think about dividends, I want you to add this to your perspective. Warren Buffett is expected to make $5.7 billion in cash from the dividend stocks in his portfolio. And here I am just trying to get to $100 a month, right? Anyway, let's get into the stocks that have paid me the most in June and what the grand total was for that month. Now, you can see me scrolling through on the right side of the screen, and a lot of these, some of you will notice, are real estate stocks, which is an asset class that by law has to pay out a massive percentage of their earnings to their shareholders. So it is very common for dividend-focused portfolios to have several REITs within their holdings. Now, I'm building out a dividend-focused portfolio on the side, but I do not believe in chasing dividend yield. Let me say that again. I do not believe in only investing in a stock for the dividend yield. Or in other words, I don't believe you should invest into an asset solely because that asset pays you a high dividend percentage, right? You can still build out a portfolio, a dividend portfolio that holds great, stable, growth performing stocks and assets. Be wary of those dividend traps out there that rope you into buying into the company just because the dividend is attractive. I had somebody comment on a video a couple days ago I made this video months ago, right? But they commented a couple days ago about how AG&C is a yield trap. That's what the video was about. And he wasn't rude or anything by any means, but in so many words, he said that because AG&C is a MREIT, which stands for Mortgage Real Estate Investment Trust, that it'll be fine long term and that I just need to understand MREITs better. And I had to let him know that I disagree with the stance. Historically, AG&C is a stock that has lost 50% of its value over the course of 13 years. I'm sorry, but even if they do manage to bounce back and gain 50% over the next 10 years, that is not a winning investment in my eyes. Now, I do still own the shares of AG&C that I first invested into when I first started investing. But the only way that position is growing is from the reinvested dividends. Right? I'm not putting anything back into it. But AG&C is was one of my bigger monthly paying dividends currently, sitting at a $5 a month payout. $5 a month, every single month, I get paid out in dividends from them. Another yield trap in my portfolio is PSEC. And although I'm still doing well in it, it's another stock I can't comfortably recommend to newer investors because its history, again, is a buyer beware situation. But despite this, I am currently earning about $10 a month every month from this position. But both of these are companies that have cut their dividends over the years, and that's an absolute red flag for me, and it should be for any dividend investing portfolio, because if I were going into retirement and was dependent upon dividends from these companies to help pay my bills, then essentially I'm ass out. Right? I just got to take the loss. I got to take the cut, which is why I diversify my portfolios the way I do, so that I'm not dependent upon one or two stocks to help me make passive income. All right. So look, I'm going to keep this video short. I just wanted to show some of you out there that may be looking for a way to build up a passive income stream, that you can start this today. It's totally possible if you haven't already. It just takes time and it takes consistency. And I'm nowhere near done. Next year will be the biggest year for me in terms of building my dividend income stream. But let's get to the grand total of how much 96 checks came out to. Grand total for June dividends, took me a while to gather all this data, was $87.34. Now that's about $13 shy of my $100 a month goal. And I know that's not a lot of money, but considering I did absolutely nothing to earn that money, it's amazing to me. Amazing to me. Now, did I take that money and go sign up to Jeremy Lefebvre's Patreon? Did I take it and sign up for Ian Dunlap's $10,000 course? Well, no, because I'd be about $9,900 short. But did I go buy a ticket to Invest Fests? Hell no. Hell no. I poured it all back into the market. That way, by next June, it'll hopefully be double what it was this year. But look, that's going to do it for this video. Remember to invest diligently, but more importantly, invest responsibly. Remember that this is totally possible. Go create a passive stream of income outside of your normal investment. I'll check you all out in the next video. Later.
Just that new batch. We must pay homage.
Back again, nigga. Hey, this shit ain't been the same since I bossed up. You talking down where you gon' fuck.